Welcome back to Australian Fund Monitors Meet the Manager series. Today we're talking to Matt Williams, Portfolio Manager for Airlie Funds Management, which was acquired by the hugely successful Magellan Group in 2018. Welcome to AFM, Matt. How are you?
Thanks, Chris. I'm well, thank you.
So, Matt, you've got a portfolio, Australian focused, concentrated. Which end of the size scale does it sit in?
So the Airlie Australian Share Fund, which I'm the co-portfolio manager with Emma Fisher, we basically describe ourselves as a core, long-only, Aussie Australian share fund. We sort of go anywhere in terms of the up and down the market cap scale, but with an eye to liquidity. It's not a small cap fund or a micro cap fund, but we certainly might find the odd small cap name in the portfolio. And it's an eclectic bunch of companies. We don't sort of try and pick thematics or themes, but we try and build the portfolio from bottom up. And so we end up with stocks such as Mineral Resources, one of our largest positions, and Reece, the plumbing wholesaler, is one of our largest positions. So it's a mix and match of the best businesses that we think we can find that are priced attractively at the time, that we can make money in over the medium term. Hopefully will pay us a growing dividend stream. And so we're trying to, obviously being as active managers, be as concentrated as we can and really reflect our conviction in the portfolio. So we have around 25 to 30 stocks at any given time with a 10% cash limit. It's a core, simple product, is the way we describe it to potential investors. No shorting, no derivatives, and we restrict ourselves from taking a too extreme view on the future by restricting our cash limit to 10%. When you think back to the pandemic, the depths of the market fall in March, people who were going to cash seemed eminently sensible. It seemed a very sensible thing to do in the depths of that panic. It's funny how quickly we forget. I mean, there was real panic out there in the market. Luckily for us, that decision was not available to us, and luckily so, because we would have missed a good portion of the ultimate fantastic recovery in stocks that we've seen since then. Yeah, it is working well, and it was labelled a big white elephant, but thank goodness for the NBN, I guess. Really, I don't think if we'd had this crisis 5 years ago, I don't know whether we would have been able to function as well as we have. In terms of company meetings, I think I've had more meetings with management, virtual meetings, in the last 6 months than I've had in the last 2 years. It's been quite extraordinary that how quickly we've shifted online, and companies and investors have embraced it and found it very efficient to talk, to discuss. And to look at what's affecting their businesses, and so it has been a positive thing out of this pandemic, if there's any positives, and I think this will continue on in the future. This is the way investors will interact with companies, I think, a lot more going forward. Yeah, I think this pandemic has accelerated the change in so many ways, particularly digital. I think all companies were in the process of slowly but surely digitalizing all of their business, from supply chains to all the way through to how they interact with their customers. They are absolutely accelerating that right now, and that was a theme that came out of the reporting season that just wrapped up. The reporting season was, quite an interesting one, in respect that what it meant for the last 6 months. Really investors, gave a let off to companies. And what does it mean for the next 6 months? Well, it's hard to tell. So we're really in this sort of no man's land. But the reporting season itself was positive, obviously, for some retailers. Quite amazing figures that back in March you would never have expected. And so back in March, I think the forecasts became very dire, became very hard in terms of profit forecast looking out into 21. And what's happened, I guess, is that it hasn't been for many sectors as bad as what was, prophesised back in March. And in fact, we saw more upgrades, companies upgrading, analysts upgrading the profits of the outlook for companies than we saw in downgrades, which is a pretty rare event in any reporting season. It hasn't changed the way we invest or manage the portfolio in any major way. The pandemic has obviously made everyone look at their processes, both businesses and investors, to see that it's fit for purpose and fit for the future. Really, it's been about taking opportunities in companies and sectors where the market has taken a very short-term view, where really this pandemic will end one day, and looking through that, there's been some opportunities, I guess, in some really hard-hit sectors that we're looking through or we own currently, and some examples of that, like I guess Qantas was obviously really hit hard. But the fact is, when this pandemic ends, it's still going to be in a very dominant position here in the domestic market, which is a very attractive market. Retailers obviously were hit hard first, but have bounced out of that amazingly well. So now is the time, do you think, is the market now extrapolating these very strong numbers too far into the future? So we're thinking about that. REITs are a really interesting sector because everyone's thinking, well, office is potentially going the way of retail, which everyone is very negative on. And so we're sifting through those companies now to find opportunities. Because certainly the pandemic has changed the way we will deal with office and going back into the office, but we're not sure that it's going to happen immediately. And, I think people will return to the office over time. But so, we're looking for opportunities in those sectors as well. I think people are quite worried about the roll off of stimulus, the things that have gotten us through, really, the heavy stimulus from both the federal and state governments, and people are worried about what happens when the banks bring their loan deferrals to account, and unemployment is certainly going to trend higher. But I take a bit more of an optimistic view. I think there's a lot of pent-up demand, particularly in those states that have been shut down, really only Victoria now, I guess. But there's pent-up demand, I think, around the country in terms of travel. The fact that people won't probably go rushing back to international travel, and if they spend that money in the domestic economy, that's, over 10% of the annual retail sales. So there's some offsetting factors that I hope don't make the roll off of stimulus as bad as what current commentators are potentially forecasting. Governments have made mistakes. The state governments, in particular, New South Wales with Ruby Princess and Victoria with quarantining, but. I think the fact is this is a once in 100 year, hopefully, situation, and things were done on the run, and I think in perfect hindsight, it's hard to you can't say that you can't criticise us as much as some people like to do. So overall, I think governments have done a good job, and we were heading really nicely out of the situation until the Victorian flare up again. which was very unfortunate, because I think we were on a really good path there. But I think now this battle over borders is become totally political, and the governments should really think about the state governments should really think about what's best for the country going forward. And the opening up of borders is obviously much needed and should be done in a reasonable time frame.
Matt, thank you very much. Really nice to speak to you and get your voice of experience. I'm not quite sure how many years it is, but it's probably approaching 30 or 35, is it?
I might look like I've got 35 years experience, but it's approaching 30, Chris. Thank
approaching
you.
30, okay.
Thanks for your time.
Matt, thank you very much indeed. Delightful to talk to you. We'll look forward to talking to you again soon.
Thank you.